So I want to take a second for you to explain exactly how this works, because I think there's a lot of people
Yeah.
who listen to this who they've heard of yield farming, like the terminology. They have
Yep.
no clue how it works. So kind of just walk us through exactly what's happening when people are doing this.
Yeah. So first, I'll just say mechanically, there's a lot of different versions of it. I'm just gonna talk about sort of a really simplified version of it, and you can put as many knobs on it as you want. But at its heart, what is it? You build a product, and it's a product people can use. Um, maybe it's a borrow lending protocol, maybe it's a DEX, um, whatever. Let's for now say that it's a borrow lending protocol. That's where this all started. Um, and what you say is, all right, I want a lot of people to be borrowing and lending from my protocol, right? And what do I mean by borrow lending protocol? Something like Compound or Aave, where you can basically put in Ether and take out USDT or whatever. There's sort of like a bunch of accepted tokens, and you can lend some of them to the protocol, and you can borrow other coins against it. And then other people can borrow the coins you're lending out, and you're paying each other interest for this. Um, I so um, so you want to incentivize growth in your project, and you want to incentivize people to start using it, building on it, integrating with it. Um, and so what you do is you say, all right, first of all the revenue is going to go to this token. You create a token; it's the equivalent of an exchange token, a protocol token, whatever. And you say all the revenue for my project's going to this token, with Compound is comp. And what we're going to do is for the next 3 months, we're just going to every day airdrop 1,000 tokens on everyone who's using the platform, just proportionally to however much you're using it. So however much you're borrowing plus lending out, that's how many points you get, and then these thousand comp tokens just get divided evenly between all those people. And what happens then is, a lot of people go to use your protocol because they want to get your token for free. So they start borrowing or lending, and they get your token. You give up most of your tokens, or some, or depends on the project. And they get yield. And what yield means here is basically they're putting up $1,000 of capital, and every day they're getting $1 of the token airdropped. And so they're getting 10 bips a day, on their capital, just literally putting it there and lending it out. And the yield is coming in the form of the protocol token that's being airdropped on them. And the vision is now all of a sudden all these people who use borrow lending protocols have your token. They want yours to win. They want to build on yours. They're aligned with you. And they provided a value by providing liquidity to your protocol, by providing coins for people to borrow. And so all that's great and helps you out. You help them out. You're aligned. That's the theory behind it. And I'm sort of taking sort of the positive light, the optimal version of this, and ignoring all the bad shit that happens.
Okay,
But
so when people are doing this,
yep,
just to summarize, the whole idea is to incentivize users to adopt my product or my network over another one, and therefore, basically, I pay some rate of return for them adopting that, right?
that's right. Over another one, or over just doing nothing. But yeah,
Okay. The interest, I think, is or the return on some of these, I think, is where kind of, especially people who come from the traditional world, are like, wait, what is going on? Because
yeah,
the return can be 1,000%, right? Or kind of these
exactly.
crazy numbers. So kind of talk through a little bit. I'm assuming that you believe that that's not very sustainable and will kind of get commoditized down, but maybe not.
Yeah, that's a really good point. And that is where a lot of this shit starts to get weird. Is that when someone says that they have an interest-bearing product for you, let's just say get rid of crypto, right? So it's like, I got some bonds, they're like, I don't know, corporate bonds or something, and they're going to pay you interest each year. And you're like, great, what's the interest? It's like 6% a year. So you're like, all right, that's a number that I find plausible. I'm sort of like, is that better or worse than putting in the stock market? I don't know, maybe it's a little worse, a little safer, or whatever. Anything between 1 and 15% a year is sort of like normal land, and crypto interest rates are higher. There are a lot of ways to think about this, but just generally, crypto interest rates are 20% a year, roughly. So in crypto, you have something that pays 20% a year, and that's actually kind of reasonable. You know, there are a lot of people who pay 20% a year for capital. There are a lot of people who loan capital at 20% a year. Whatever. So okay, anywhere between like 5 and 30% is like plausible in crypto. But as you said, some of these are 1,000, and 1,000 is equivalent. Like it's just like that's a ridiculous number, right? Like no one ever pays you 1,000% a year, right? And why is that? Well, first of all, everyone would do it. Also, why are they paying you so much money? Where's it coming from? Like this is way too much. Like you could have said 100, and I would have been amazed at it. Like 1,000, like that's ridiculous. So, sort of your thoughts, like this has to be a scam. Like this is the like send 1 Bitcoin to us and we'll send you 2 back type scam, right? And what's actually happening there is, well, mechanically, what happened was, yeah, they're airdropping the tokens on the users, and you just do the math. They're like giving away half of all their protocol tokens the next 2 weeks, and that's $250 million worth of tokens are given away. And there's optimistically going to be $1 billion locked in this protocol using it. So then you have 25% over a couple of weeks. That's where you get these insane numbers from. And there's sort of a few ways of thinking about this. The optimistic way is like, yeah, time horizons are shrinking. They want their protocol to do well soon. So they're like, we're not going to give it to the next, pass out these tokens over the next 2 years. Let's just do it over the next 2 weeks. Why wait? So yeah, it's a ton of yield for 2 weeks. We're giving away most of the value of the protocols to users, and that's the trade we're making in return for getting a lot of users. And it's still a little weird because people should be putting a shit ton of money in. Like that should be drawing $100 billion out to make the return more reasonable, right? Like that's sort of the optimistic take. The pessimistic take is like it's a scam, or it's not really 1,000% a year. And what does that mean? Well, here's an easy way to give it an insane yield. You just take a token, and every day you double the number of tokens. You just mint another entire new set of them and airdrop it on the current token holders. So yeah, you're given 100% a day, but obviously the price is crashing. Like it's just a hyperinflating token. You're not actually giving out value there. And so another thing that might be happening is that the token's price is actually crashing just as fast as it's paying yield. So you don't make money for doing this. Or maybe it's a scam. They're going to steal all your money somehow. So those are sort of the pessimistic takes.
Are these just like the new ICOs?
Yeah, I mean, they're not exactly the new ICOs. Like, I mean, there's differences, and everyone will come up with like their own, sort of reasons for why they're different. And
not structurally, but just in the sense of using a new mechanism for capital markets and incentives and kind of acquiring users. ICOs was one version. This seems just like a second version, and that's not passing judgment on good or bad. It just is what it is.
Right. And I think in the end, my answer to you is closer to yes than no. Mm-hmm. My answer is sort of like, yeah, these kind of are the new ICOs. Like that's actually not a bad way to think about it. And whatever, there's a lot else going on there. Obviously, like it's not that, but yeah, at its heart, these bear a lot of resemblances to ICOs.
And it also feels like there's this game going on. Like in my opinion, there's people who I'm probably closer with that would say, Bitcoin is the only thing, nothing else matters. All this other stuff is, frankly, garbage and like, whatever. What I think is interesting, though, is if you say, okay, like that is one view of the world and probably more right than wrong in terms of Bitcoin having immense value kind of moving forward. But there's also this like kind of thought process of, wait a second, there's a whole bunch of financial engineering and craziness going on here. If you're a pure capitalist and you say, I have no emotional connection whatsoever to any asset, you can make a lot of money, right, and drive a lot of returns. Yeah. If you almost come at it like from a hedge fund perspective, where a hedge fund says, I don't care what the asset is, it's all numbers on the screen, and basically I'm just looking for things I can buy low that go up and then I can sell higher and make a return. That seems to be the people who are thriving in this environment.
Yeah. And, there's sort of, I know I've retweeted this a number of times, although it's not actually my quote. It's a group CMS. It's a cool firm who coined this, but sort of, do you want to be right or do you want to make money? And like, there's sort of this thought of like, all right, you can use your words, you can say whatever you want, you know, and I'll be here making money because I'm going to go yield farm and you're not going to yield farm. And like, we'll see who wins. I don't know what winning means, but I've guessed about who's going to end up with more money. That's sort of like maybe what you're getting at there, which is like, put aside all the like moralizing and all the philosophical aspects of it and the projections, and just say like, can you make money yield farming? The answer is yes, you can make money yield farming. You make a lot. You don't have to lose a lot. I mean, if you just yield farm scams, then you're just going to lose all your money. And if you don't understand that tokens can crash and that their prices can move, even if they're not scams, then you're going to end up yield farming in all the pools that are probably going to crash. So it's not like you can only make money doing it, but there were ways that were actually just not that risky.